So I would say just about every guest that's come on since earnings season keeps pointing earnings as being strong. One of the key factors for their bullishness. What kind of really amazes me, though, is the reactions, though, have been really muted, right, when it comes to beats. I mean, less than typical over the last 5 years. And, I mean, really harsh when it comes to misses. So how good have earnings really been? Well, I can tell you right now, my next guest does amazing research on earnings and other market trends. I want to bring in now TMX Group Head of Global Corporate Events Research, Christine Short. Christine, welcome to the show. I love your work, your research. Let's talk about this game, this earnings game. You and I were talking during a break. A year from now, you know, let's say the overall S&P, you know, a year from now, right now we see, it's going to be $250 in earnings. Yep. We start to get closer to earnings season. That 250 becomes 230. They post 240, and whoa, look at that beat. Yeah. And it's crazy.
Yeah, it's this cycle. If you follow earnings, you can recognize it. Like you said, a year out, we start really high. Then as we get closer to a quarter, as we are kind of getting into Q2, although Q2's kind of bunked the trend. But as you get closer to the quarter, analysts ratchet estimates down. And then you get into the quarter, 80% of companies have beat. You know, what a success. Right. And so what you have to understand is analysts really do follow corporate guidance. Corporations are really quite conservative, right? They want that beat so they can get a pop on the stock right after they've said, actually, we beat on the top and bottom line. This quarter, I will say the weakness, and you're pointing out here, you know, companies that are beating are actually being rewarded less on stock price. Right. Companies that are missing are being punished more than usual. So that's one trend to note. And while bottom line beats were quite good, the top line wasn't as strong. Only 59% of companies.
That's what caught my attention. And finally, some of these companies paid a heavy price for missing on revenues. You don't always see that.
Yeah, and they should, because they're getting that bottom line beat by cost reductions. I think some companies have been rewarded for cost restructuring plans, but really what investors want to see is robust revenue growth. You want to see the companies able to grow sales, and we weren't really able to see that this quarter.
So hence the actions. All right, you do some amazing work. This is one of the pieces you do on late earnings report index. We've got a spike here. Explain to us what we're looking at.
Yeah, so this is something we call corporate body language. So the verbal and nonverbal, this being a bit of a nonverbal cue that corporations give to investors, which is in their earnings date timing. So is a company delaying their earnings date longer than usual? Are they advancing it, you know, in advance of when they would typically report? And there's a lot of information to be culled from that. You know, think about it. If you have good news to share, you run out and you tell everyone immediately. If you have bad news, you kind of sit back, digest, figure out how you're going to share that news. Companies do the same thing. In this quarter, we actually saw more companies delay their earnings beyond, you know, when they typically would report versus advance them. You're seeing right now 157 was our late earnings report. Yeah, 100 being the baseline. So 157, you can see this is the kind of most uncertain companies have been in the last couple of years.
And the bottom line, there's an extra degree of risk when that happens. I want to go straight to another thing that you do. I love this, your conference activity, because I see, you know, all the time, I'm sure people in the audience will see a stock they're in, and it's up 12%, or even let's say 5%, but it's up, volume is there, and you say to yourself, well, you know, the earnings, what was the news? And they're at some conference, right? I mean, like right now, everyone's waiting for the next conference that Apple's going to be at, waiting for some sort of AI development. Yes. You track these conferences.
Yeah, and it's just to give you a heads up, because, you know, look, investors aren't going to have access to these. We have to wait for you guys to write about it, for you to report about it, for the, you know, the journalists to kind of give their take and let us know what was said at these conferences. But like I said, again, this is more corporate body language, and it depends how you want to look at conferences. The way I look at them is if a company that I'm tracking is at all of these, at all the big tech conferences, I take that as bullish for the stock. Right. They're out there. Right. I also look at who's speaking. Is it someone in the C-suite? This is their chance to kind of, you know, bring that narrative together. And so it's bullish for the stock because you're out there and you're telling everyone about these great new developments. Where I start to get worried is when a company in that sector isn't at those conferences or they're pulling out of conferences. Right. It kind of makes me think, why aren't they there? Why aren't they sharing great news?
You know, all of the surprises that are out there that befall investors in their portfolio, there's so many clues if they just know how to pick them up. You gave us a couple great ones today. Great meeting, Christine.
Thanks so much.
Appreciate it. Thanks.
Appreciate it.